Have you noticed something strange lately? Aptera, one of the most talked about startups in the EV world, has gone completely silent. No new videos, no announcements, no factory updates. Just quiet. And for a company that's usually buzzing with innovation and community excitement, that silence feels loud. But here's the twist. In the business world, silence doesn't always mean something's wrong. Sometimes, it means something huge is brewing beneath the surface. Hey everyone, it's Steve from Aptera Club. And today, we're going to unpack what might actually be going on. Because I've been following Aptera for a long time. And the recent radio silence? It's not random. It's strategic. If you've been keeping up with the channel, you might have noticed that even I haven't been posting as often. Sure, life's been busy, but honestly, there just hasn't been much news to talk about. The last big thing from Aptera was their Artemis reveal livestream about 6 weeks ago. After that, I sat down with Chris Anthony and got some behind-the-scenes insight. Since then, though, nothing major. No July update. August is quiet, too. The last video on their official channel? Just a short highlight from that same reveal event. And naturally, everyone's asking the same thing. What's going on? Is Aptera slowing down? Are there delays? Or is this quiet spell actually part of something bigger? Well, I think I might have an answer. And it all starts with something called a hybrid direct listing. A few weeks back, Aptera released a short video titled Aptera to go public with hybrid direct listing. Now, when I first heard that, I thought, wait, what even is a hybrid direct listing? It's not a term you hear often, even in the world of startups. So, I dug into it. And the deeper I went, the more everything started to make sense. See, going public, or launching an IPO, isn't just about getting your company's stock on the market. It's about funding, credibility, and long-term survival. Almost every startup dreams of this stage, but few ever make it. And those who do have to choose how they want to go public. Let's break down the main paths, because this is where it gets fascinating. The most well-known route is the traditional IPO. In this case, a company works with an underwriter, usually a big investment bank like Goldman Sachs or Morgan Stanley. The underwriter checks the company's financials, decides what the shares are worth, and helps sell those shares to huge investors. Think hedge funds, pension funds, or large institutions. It's expensive. The banks often take 4 to 7% of the total money raised, but it's safe and credible. Companies like Rivian use this method. It's the old-school, tried-and-true way. Then there's the SPAC, or Special Purpose Acquisition Company. This became really popular a few years ago. A SPAC is basically a shell company that's already listed on the stock market. Its only purpose is to merge with a private company, like Aptera, and instantly make that company public. Lucid Motors did this. So did Canoo. It's faster and cheaper than a traditional IPO, but it's also riskier. There's less transparency and more volatility. Investors don't always like that uncertainty. Next is the direct listing. This is where companies skip the underwriters entirely. They don't raise new money. They just list existing shares that early investors or employees already own. Spotify and Coinbase use this route. It's cost-effective, but again, no new capital is raised, which makes it tricky for companies still in development or pre-production. Now comes the interesting one, the hybrid direct listing. This is like the best of both worlds. It lets a company list its existing shares while also creating new ones to sell. That means they can raise money without needing an underwriter, which saves a ton on fees. It's flexible, modern, and perfect for smaller companies that want more control. Exactly the kind of innovative move you'd expect from Aptera. And finally, there's the Regulation A+ offering. This is sort of a mini IPO designed for startups. It allows them to raise up to $75 million with fewer barriers, and they can even market directly to smaller investors, the general public. This is how Archimoto went public, and it's another possible route Aptera could be taking. Now, here's where things start to connect. When a company is preparing to go public, especially through an IPO or hybrid direct listing, they enter something called a quiet period. This isn't just a random pause, it's an SEC-mandated rule. During this time, the company's leadership is legally prohibited from making any promotional statements, giving updates, or even hinting at their valuation. Why? Because it could unfairly influence potential investors before the official filing. In other words, they're not ignoring us. They're not allowed to talk. And that, right there, could explain the entire silence from Aptera. They might be in the middle of preparing their filing documents, or what's called the S-1 registration, which is the formal paperwork you submit to the SEC before you go public. They could also be finalizing their internal audits, valuation reports, and compliance checks, all of which require complete confidentiality. If that's what's happening, then this quiet period makes perfect sense. So what does that mean for us, the Aptera community? Honestly, it's exciting. Because if this theory is right, it means Aptera isn't stalled or struggling. They're evolving. Going public would open the door to massive funding opportunities. Money that can fuel large-scale production, expand manufacturing, and maybe even fast-track delivery to reservation holders. It would also give early investors and employees the chance to trade shares publicly, bringing more liquidity into the company. And most importantly, it signals that Aptera has reached a level of maturity and confidence that not many startups ever achieve. Let's take a step back and look at all the possible paths again. Traditional IPO, too costly, especially for a lean startup like Aptera. SPAC merger, faster but carries a reputation risk. Direct listing, no new funds, not ideal for a pre-production company. Hybrid direct listing, the most likely, flexible, cost-effective, and fits Aptera's innovative model. Regulation A+ offering, still possible, though less likely if they're bound by a quiet period. If this quiet spell really is linked to an IPO preparation, then the hybrid direct listing makes the most sense. It lets Aptera raise new money, stay independent, and keep costs down, all while preparing for mass production. So here's the big takeaway. Aptera's silence isn't the sound of trouble. It's the sound of progress happening behind closed doors. Think of it as that calm before a storm. Not the destructive kind, but the transformative kind. The kind that changes everything when it hits. Aptera's founders have always been visionaries. From designing an ultra-efficient solar-powered vehicle to rethinking what personal mobility means, they've been bold from day one. If they're about to go public, it means they're ready to scale that vision in a massive way. So maybe we're not witnessing the end of communication. We're witnessing the pause before the next chapter. When Aptera finally breaks the silence, I wouldn't be surprised if it's with a major announcement, possibly the biggest one in the company's history. What do you think? Is Aptera in IPO prep mode? Could this be the quiet period before a groundbreaking reveal? Or do you think they're simply focused on final testing and production behind the scenes? Let me know your thoughts down in the comments. I love hearing your theories and insights. And who knows, maybe we'll all look back on this moment as the calm before Aptera's biggest leap yet. Thanks for watching, and as always, stay curious, stay inspired, and I'll see you in the next one.